Want to know how you can gain access to capital to jumpstart your journey to entrepreneurial success? For entrepreneurs who are just starting out or those who have been in business for years, Minority Business Access is your podcast. Welcome to our show, where we will guide you in avoiding the pitfalls and thriving in your chosen business. Now, on to the show with your host, Solomon Ali.
Sterling, it is so great to have you here on Minority Business Access. It's been a year and we're at another Magnify Your Wealth, and I'm so excited to see you and your wife and to hear about all the great and wonderful things that you guys are doing.
Thank you. It's a pleasure to be here. Pleasure indeed. Good to see you again, Solomon.
Pleasure is all mine, Sterling. So tell us a little bit about what you've been doing in the last year.
Well, we've been developing greater inroads into the broker markets and broker communities to acquire apartment complexes. And we're still chasing those projects, and benefiting from the workforce housing model that we're a niche business in.
Okay, well, how is that working out?
It's been a very good year.
Really?
Yeah, we've brought on a couple new projects. We've gained a lot of momentum, and we love the progress we've made in our business model.
So is the progress due to COVID, or did you change your business model up?
Well, there have been some changes forced by the COVID. Yes. COVID has done a number on the capital markets. It's done a number on the lending side of the business. They even shut down for a while,
yes,
which was disruptive and destabilizing. And there was a lot of bridge lenders, short-term loans, that providers that just went away. And
wow,
it changed the playing field tremendously. And so we did have some quick steps to save a deal recently. Most recently we were quoted for a bridge loan, which is a short-term loan, for us to reposition a property, and they came back at 9% interest.
9%?
And I hadn't heard of 9% interest in years.
9% was back, what, pre-2000?
That's right. And so when we had the opportunity to connect with another lender, a nonprofit lender actually, that came alongside us, we were able to reduce that number dramatically and brought that interest rate back in line to about 4.5% for a short-term loan.
Oh, wow.
Which was phenomenal.
That is awesome.
Yeah.
So now you're in the apartment business. That's what you do. You acquire apartment complexes.
Yes, we do.
Okay. And that seems to be a pretty unique skill set. I don't think everyone can do it. I mean, so how did you get into it?
Well, I come up from since college, I started to be an architect, and learned a little bit about the industry after spending some time in the education, and concluded that I probably wasn't that much of an office guy, and I liked being more involved in the process. And so I took some of my previous construction experience and began to be a superintendent building apartment complexes. And that's where I started, and began building and developing apartments up until the recent transition to Refuge Investments.
Wow. So if someone wanted to get into the business that you're doing, okay, what would they do? What would you recommend to them?
Well, first things would be to educate any gaps in expectation or understanding of the business space. And fortunately, there are a number of internet gurus that have good onboarding programs which would allow them to learn about the acquisitions or the purchase process, learn about the management process, even the lending and contract side of the business, which is pretty unique. And it helps abbreviate that learning curve so that they could come in and get on board in that space with confidence. And that'd be a great place to start if they hadn't had any background in this industry.
Okay. So what's plans? I mean, we're at COVID. There's rumors and talks that there may be another shutdown, tightening on credit lines and loans may take place
That's right.
again. Last part of this year, first quarter next year. Is that going to affect business?
Well, I can speak to the two previous seasons of COVID, right? Okay. The earlier this year when everybody was a little frantic and we didn't know what it was, we didn't know how to handle it. We can speak to that and identify that when we had a plan and we understood how to approach it, I can share a little example of what we did. We gathered all kinds of data on unemployment and nonprofits and services to residents and services to renters to help them through any crisis, whether it was COVID or just unemployment in net general. But we consolidated all that data onto a knowledge sheet or a white paper that we were able to handle out to all our residents prior to the event really taking shape or really becoming scary. So you were
really proactive.
So we were remarkably proactive. And in that first wave, for instance, we never saw a dip in revenues on our properties. And it was really quite remarkable because, again, we're in that workforce housing space where when the hospitality industry shut down, we know that affected some of the folks that work with that live in our properties.
Right.
When the airports scaled way back, we have individuals that work at the airport that stay in our communities. And so it really did affect their job prospects and their employment prospects, but because they had already had these resources in place, they were insulated from the impact. And then that, of course, turned around and insulated us as property owners.
So you were a huge, I'm going to use my word, blessing to them to be able to share that information and go out and do the research for them so that they didn't have to find it on their own.
I'd like to believe so. I mean, that's really one of the cries of our heart, right, is to do good while we're doing business. And we can talk more about that in a minute, but that was instrumental again in the second wave of impact to the rental communities when the CDC concluded that we're going to eliminate the opportunity for an eviction to occur because housing is so critical to families and the community itself at large. But that tends to encourage folks to just stop paying rent even if they can afford to.
Right.
And that's an unfortunate thing because we're still obliged to pay our mortgage. We're still obliged to pay our managers and our maintenance guys. So that shortfall would be detrimental to our business model. Well, here we are several months even into CDC's announcement, and we have not experienced that shortfall or that impact to our cash flow because of the proactive nature of our interactions with our residents. And I'd build on that to say that we're probably also benefiting from several seasons of devotion to our residents before this event even occurred. And so we had built that relationship or rapport where when we make a phone call to our residents, they actually pick up and want to talk to us. They don't hide when they get in distress because we have programs, even in our own organization, to help our residents get back on their feet if they stumble. And
so you had developed a relationship, so it was just an ongoing relationship.
That's right. It was just you just continued to build on a relationship we had already fostered.
Now, that's really unheard of in your industry and what you're doing.
I've been surprised, but I feel that we are doing something rather unique in that. And I'm building a better understanding of how different our business is from the typical syndication or apartment investor business, because we've taken it past the for-profit model, which we are. All of our investors are treated to market rate returns, above average returns, and we treat the business as for-profit. We are not a nonprofit entity. But the activities that we do to invest in our residents include classes on single parenting, how to get out of debt, how to fix your credit, or we have job fairs that come through the property and actually do interviews and hire on the spot.
Really?
And our average is they were coming by once a quarter, now they're coming by about once every 4 months because of COVID has really slowed things down in general.
Okay.
And of course we don't push it if the limits of the city have said don't gather. But once the city begins to loosen up again, we again have another wave of this job fair process. And we have employers that come to our properties and actually interview on site. And our average is hiring 4 people every event.
Wow.
Yeah.
Now let me back up a little bit.
Sure.
I asked you how you got into the business and you told me. Tell me about your first deal.
My first.
Your first deal, the experience of it, the close,
the rawness of that.
Yes.
Oh my goodness. So that was a 112 unit deal that a friend of mine had found, and he didn't have the construction or apartment experience that I could bring. And so I got a phone call one day, and he says, Sterling, I've got this deal. I'm really excited about it. I'd love for you to take a look at it. And that began this adventure of, of course I want to see that. Let's go take a look. And,
right, I would be the same way.
Right, oh man, a phone call like that.
Yes.
And so turned into a big pursuit and a lot of excitement about the diligence and all the pre-purchase work of qualifying that property, but also that process of raising capital and that process.
Okay, so were you a little nervous?
I was at adulation, excitement. I was totally over here I was wrought with anxiety and stress, and are we going to raise enough money? And we have a clock ticking, that escrow is so short when you have to raise money.
When I did real estate, it was so funny. I did it in nursing homes with a lot of commercial properties.
Sure.
So I would come up with that down payment of 20% and everything, and sometimes 30%. And at the time that I'm doing the due diligence and I know, okay, I got to find that loan. Clock is running,
That's
out.
right.
My bottle of nerves and everything, and I'm like, oh God, I got to find it. And it's like, oh, and then when we get ready to close, then it's like the spoils of war.
Yes. Well, even the chaos of the close, you've got like 5 days, and every email, your phone's going off the whole time. Emails are waving in, and you don't know which one's your responsibility and which one's not. Right. It was an amazing undertaking, and fortunately we had partnered with another great friend, and Bob Bowman, a great man, and it's just been, and he had come alongside us and really was the experience to bring that to fruition. But it was a great adrenaline rush for me to be a part of that first deal.
Oh, I bet.
And I look back in fondness with that, and my friend Larry, he was a great addition to, or really gracious to include me in that adventure. So yeah.
Sterling, after that, all the energy goes down, you closed, you pulled off this amazing deal, your first deal, the excitement, everything dissipates.
That's right.
Now it's time to go to work. What does that look like?
Oh, well, in that project, I didn't have as leading a role as I ended up having in the second project we purchased, but it was fun to watch that start and get its momentum. And then I was surprised at the lag or the distance of time before we found our next deal.
Really?
Finding the next value proposition, right? We can't just buy anything we see. We're looking for a really specific return structure. We've got a very defined purchase criteria.
Tell me about that.
Sure. So one of our objectives is cash flow. It's probably our prime objective. And so we buy existing assets, existing apartments that have a cash flow history or a cash flow potential to justify a solid cash return for our investors, because we pay quarterly dividends to our investors because the properties we buy are profitable. And from day one normally. Now sometimes it takes a little of fixing the vacancy or maybe adjusting rents into the current market for that property. Maybe they've been held back a while. Maybe the owner's been in distress and he's done hasn't done a lot of repairs.
Sterling, when I was buying nursing homes, what we would do is this. Whether they were making money or losing money, and I'm gonna say let's say if they were losing money.
Sure.
While we're doing the due diligence process, I'm sitting back. All right, we're gonna have to get this many more clients in there in these beds and everything prior to closing. That's right.
That's right.
Because I gotta change that cap rate quick. And then the lenders are like, after a while, because I got really good at it, at least they told me I got really good at it, and I guess so, because they kept giving me loans.
That's right, they kept saying yes.
Yes. And so, but then we would turn around and cut the costs. And see, I bought nursing homes because everybody thought I was in the nursing home business except me. I thought I was in the real estate business. The nursing homes, to me, were just a way to pay for the real estate.
Right.
And so it was like, okay. So I would go out and buy all this stuff and put the little money down and turn around, and it's like, oh, wow. And when, at one time we had 500 employees in 13 nursing homes.
Oh.
Okay, so that's a lot of people. We didn't have no little small ones. So that kind of experience was kind of unique to me.
For sure.
And going through, and then we went and did something I guess you guys are probably going to do. We did apartment conversions where we would turn it to condos. Mm-hmm. Okay, do you guys?
I've done that.
You really?
I have.
Oh wow!
I've,
I think you told me about that. Please tell us.
Yeah, and during my corporate life, I had the occasion to help developers renovate commercial properties. I mean, we turned a parking garage into some apartments, and we took office space and built condominiums.
Wow.
And it's just really fascinating. I think there's going to be a large trend of that coming up, because I believe that the office market has experienced a dynamic shift in the way the workers and the workforce of the future will gather.
So
I think there'll be a lot more remote workers.
When you say that, Sterling, are you talking about it's going to be more mixed use, like your apartments?
I do. I think that instead of having a building that's 100% office, it won't shock me if the top floors get converted to condominiums, and then the offices remain on the lower floors.
Okay.
So that people have the opportunity to work in an organized environment of the office space that's been so common historically, but also proximity to work becomes a real value. Most of us have learned that during COVID,
yes.
that the convenience of being at home sure beats sitting in traffic for an hour.
Oh, that's true. Now, let me ask you this, and this is something I've been thinking about and just kicking around. And with COVID and everything that's actually going on, okay, do you think that they're going to kind of get rid of some of the commercial property, like the office buildings, because employees are not going to go back to it, or what's
Yeah,
your thoughts?
I would agree with that trend. I think that businesses have learned they can be profitable without having all that space leased.
Okay.
And I don't think it's a constraint for in-business growth anymore that they now have to add another 10,000 square feet of office space to hire another 100 people. They can just grow their organization with remote workers. I think is going to be much more well received than we had historically used.
Oh, wow.
So that underutilization of office space is going to push those owners, if they can maintain their properties, to change its occupancy so that they can, or change its use so that they can restore occupancy.
So currently what's going on in the marketplace, you believe is going to help change society and how we work and where we do business?
Right, I think there'll be a lot of opportunities because of it. I mean, initially, it'll probably be viewed more as painful, but in general, I think that the refinement of the new work and the new work style and the way we are trying to drop the amount of commuting hours, and green is a big agenda in the market today. How do we lower the amount of hours we're driving, the amount of miles we're driving, the number of cars needed? That means we're going to have to live closer to work.
So Sterling, you have all this experience.
Yes.
Many years of experience and expertise. You've closed on all these fabulous deals, which are very exciting. If I wanted to invest with you, I mean, what do I have to do? What would I have to do to give you some money and let you do what you do so I can make some money while you're doing what you do?
Well, that's a very kind question. Obviously, the first thing would be to identify what your appetite is for investing, and if apartments or the real estate space is of value to you, you can come find more information about us on our website. Refugeinvestments.com is a great resource. We have both.
Okay. Sterling, so how would someone give you their money? What would I do so that you can make me some money doing what you're so good at?
Well, thank you. I guess one of the quickest and simplest ways is to learn about us by going to our website, refugeinvestments.com. That's REFUGEINVESTMENTS.com. And we've got a whole list of information there and resources there to explain a little bit about what we're doing from our business perspective. But also we have some opportunities for you to join our email or learn about get our newsletter. That escaped me for a second.
No, that's just perfectly fine. So, Stern, how do I know as an investor when I go to your site what it is that I want to do and what might be best for me?
Well, we'd start with, if you have the opportunity, to fill out the investor questionnaire.
Okay.
Because it begins to help us understand a little bit more about your desires as an investor. What's your appetite? What do you want to accomplish? And to make sure that we're a good fit for you. And that
You mean I could be rejected?
Completion of that, well, we don't, if you have $50,000 and that's all you have, we're not going to invite you to a place where you're uncomfortable.
Okay.
Right? So we qualify our investor base. We make sure to communicate with our investors.
Okay.
And so after you complete that form, you'd get a phone call from me, and we'd begin to create a relationship. And you learn a little bit more about me. You could ask some questions that maybe we hadn't answered yet.
Yes, I have one now.
Okay.
How much return do I get?
Well, the returns are based on the cash flow and the performance of the property.
Okay.
But I can tell you what we buy. I can tell you part of our underwriting rules.
Okay.
Part of our underwriting rules is that we can offer an 8% preferred return to our investors.
What does that mean?
That means that if the property, before anyone else is paid, except for operating expenses, before anyone else shares in profits, the investors, in the Class A investors, get first position to receive their cash, and we are targeting an 8% minimum return for their investment.
Okay.
But our objective when we acquire properties is that shows that we have cash flow. We're triggering enough cash every quarter to make distributions quarterly. But then we also have the other part of our underwriting is that as rents increase and as the property gets healed with occupancy and vacancy, both vacancy and collections, et cetera, problems that might have existed, our exit and the sale of the property will end up giving an average of a 20% annualized rate of return. And that's over a 5-year period.
Wow.
So that's our underwriting criteria before we'll buy a property or look at a property.
Wow, that's pretty amazing.
And so those are our targets for our investors. But again, real estate comes with risks. No guarantees are made, but that's the kind of opportunities we pursue.
Okay, well now, since we are speaking of real estate, is my money secured by the real estate or by a promissory note?
We syndicate the projects, so there's a private placement memorandum, which is a legal document that allows you to secure shares of ownership in the asset itself. And so the business entity that buys that property, you become a business partner in.
Wow, I like that. I like partnerships and joint ventures and things of that nature, especially in real estate, because it's exciting, one. Two, it helps to minimize the risk and everything of that nature, and it allows you to leverage a lot more and buy a lot more properties.
That's right.
I get really excited about it.
Well, and I like to say that our investors get to leverage our experience.
Yes.
Right? We've done all the heavy lifting. We've been in this space a long time. We've got a lot of our own cuts and bruises from our experience, and because of the accomplishments and the things we've been able to do, we're bringing that kind of success and making it approachable for our investors.
Now, one of the things that I heard is that you guys have a lot of projects that you're having to turn away because you're not getting enough investment money in to actually do that.
Well, our capacity to find deals is not our limiting factor.
Okay.
And so as we're able to gain more friendships and invite more people to participate, we gain more momentum, and we help our investors gain more momentum.
So we're going to look right into that camera. So you're finding plenty of deals and opportunities.
That's right.
But not enough investors to actually participate and to have this 8% return. And I find that just to be totally mind-boggling, and here's the reason why. Because you can't get 1% at the bank.
That's correct.
Not 1%. And Here it is. I'm sitting with someone who has expertise, experience, knowledge, and who's done it over and over again. And they're paying out as much as 8%. They can't guarantee it, but paying out as much as 8%.
That's correct.
That is phenomenal. Yes, I'm gonna need your number and your information. I might have to come and camp on your doorstep.
Well, thank you for listening tonight. My name is Sterling Lund. I'm with Refuge Investments. You can find more out about us at refugeinvestments.com. That's refugeinvestments.com. I look forward to talking with you about your investment objectives.
Sterling, I want to thank you so very much for coming on Minority Business Access and sharing the great knowledge and the wisdom that you have shared. And I look forward to giving you a call myself to see what we can get into.
Well, I'd be pleased.
Okay, thank you so much, Sterling.
Thank you. Thank you so much again today.
You've reached the end of another episode of the Minority Business Access Podcast. Connect with us at solomonrcali.info to leave a review and access more resources. We hope you enjoyed this show and found great value. See you at the next episode.